We can start.
Yes, sir, we can start, sir. Live streaming is also on.
All right. Okay. Friends, welcome to the periodical GST update session from GSTZen. And this session is more to do with the book closure. We are on end of June. I'm sure everyone are going to finalize your books. Some of you would have already finalized. If you're a listed entity, it would have already gone for signature. That is only 1% of the population. So the rest of the population is now closing books of accounts for financial year 23-24. Today we are going to discuss from the perspective of GST, what are all the things that you need to take care. 53rd Council meeting was just around us and a lot of changes that was proposed. And the coming budget going to be tabled in the month of July, I think in the third week of July, is likely to see a lot of changes in the GST Act. So GST का 7 साल हो गया, GST के साथ साथ हम 7 साल complete कर दिए. So it is kind of an overhauling. So they are relooking at various provisions that needs to be changed, which will ensure the litigations are low. There has been substantial kind of a knowledge information which the GST Council has by way of various appeals that have been filed in various forums before JC or Commissioner Appeals, and cases would have been disposed. Most of them would be pending for filing appeal with the tribunals. Considering to avoid litigations, there were changes that are recommended in the Act. Considering that the positions that the department has taken and taxpayer has been taken, so they have brought up some circulars and clarifications in terms of ITC availability or the taxability. It's very important that every one of us who are into GST should always get updated, including professionals like us. On this note, I welcome you all for today's session on closure of the books. My name is Venugopal. I'm a chartered accountant practicing, and I've been a regular speaker on GST. I've been in practice since 2002, over 22 years, developed a lot of insights of what it takes to avoid notice. Now, I wouldn't say that the notices can eternally be avoided. It's like as long as we are alive, it's quite common that we will be getting cold, fever, cough sometimes, right? And we take some medicines and get right. Your notices are also like that. If you keep your body healthy and fit, the chances that your immune system will take care of you. So if you file your returns using a software, reconciling with your books of accounts on a timely basis, the notices that come can be easily handled. If you neglect your body, some chronic diseases can take over and it may take a longer time to repair. That means if you're filing your returns without cognizance to what is the data which is available on other side, the kind of notices that come and your ability to handle will become very challenging. So today, along with me, my colleague Pranit would walk us through on what are the notices that people are getting, how do I get on hold of the notices, how do I ensure that I have sufficient notices, timely replies, and how to reply. All those aspects will be taken care by Pranit. So with me, I have Vasista. I thank him for coordinating and managing whole of this program. Vasista is the senior sales lead at GSTZen. About GSTZen, GSTZen is a GSP and an ASP. We've been in practice of GST return filing software since 2017. There are over 18,000 subscribers using various services on the platform. About GSTZen, GSTZen, as I said, is an ASP and GSP predominantly in the business of assisting taxpayers to file the returns. Now, along with that, we also have a lot of APIs where the software providers integrate that with their accounting softwares for generating e-invoice on a real-time basis, or When you are making payment to vendor, you want to take a decision whether that invoice is visible in 2A or 2B or not. Filing GSTR1, fetching the data from their application and reconciling and filing with the government portal. So without going to the government portal. Taking stock of the purchases which are visible in the portal, not visible in the portal, missing, etc. You will find a lot of customers from mom and pop stores to the listed entity, manufacturing to the servicing to the freelancers using our application. The best parts, there are two best parts of our application where people always love. One, the consolidated data of the returns which have been filed and the reconciliations, the way the data gets downloaded into Excel and the ease of using it. We finance professionals, we always love to use Excel. It's been our blood that there wouldn't be a day where without opening an Excel file, we have concluded. Just some time back, I was working with one developer on looking some and doing an R&D analysis. So first thing the developer was asking, do you want me to build an on even this application on Excel with the Copilot, or will you give me a freedom to build on another platform? So to that extent, people associate finance professionals means and it's their Excel thing. So the people, our subscribers love GSTZen because of our reports that get in. The second good thing about GSTZen is the support. Most of the products or all the products of ours are is like use yourself, the self-service. But however, our support is kind of one of the best who can always guide you on where you're stuck, what is needs to be done, what's next. And all our products are very simple. There's not complicated rocket science in it. And that's what we do. And Mr. Surya Subramaniam is the co-founder of this organization. He designed the whole of the tech. So that's about the company. Contrary to the earlier sessions, one change in today's session is we are coming up with an experimental thing as how a session can run without a presentation. So we would like to see a 30-minute session of mine without a PPT. We are going to have the session. I would now urge members to put your questions in the chat box. Make use of pen and paper notes so that you are attentive and you are through and through with me. So there are three things I'm going to talk about. First part of the session where closing books of accounts. I will be talking on reconciliation of revenue. Second, I will be talking of reconciliation of input tax credit liability thereon. Third, correction of errors, which is carry forward effect of the previous year to the current year, and closure of the books thereon. Right? These are the three things we are going to talk. I would request everyone to make notes. Right? It's a little different from the way we do. So you always look at it, hear it, and think. But now I'm putting some trouble so that after the lunch you are not sleepy, and this being a virtual session, I really can't see you. So other side, I don't know what's happening. Now at least this makes you a little attentive. Okay. Any given point of time you are struck, you have a doubt, you want to interact, feel free to put your questions in the chat. We are here to support you. And this webinar, I expect you to walk out with all your questions. Yeah. Let's start with the first aspect of the discussion, which is the reconciliation of revenue. So when I say reconciliation of revenue, broadly, everyone knows that the total revenue, the credit side of P&L should match with my GSTR1. GSTR1 is my sales register. Good part of GSTR1 do not have any carryover data. And we are very soon going to come up with GSTR1A. This is the proposal of 53rd Council meeting. So we will soon see an amendments in the Act about introduction of GSTR1A, which is amendment to R1, so that any carryover effect they can be in that place is what the expectation of the government is. Now, the ask is the revenue and the P&L should match with GSTR1. So firstly, we should all know there is a timing difference between the revenue in the books versus revenue with the GST. For example, I am a services company. I provide the service. I give subscription to the customers, and customers pay me a 1 year subscription. Let's say customer has paid me 60,000 rupees for one license subscription. In the month of January, I have raised a revenue invoice of 60,000 in the month of January, but for my books of accounts, the P&L account, I will amortize this 60,000 over 12 months period. Over 12 months period. That means I have received only 3 months data, 5,000 rupees per month. So 3 months I have received. So 15,000 is revenue for me in the P&L, while for the purpose of GST, the revenue is 60,000. Just into the next year, in the books of next year, 45,000 is the revenue, but for the purpose of GST, there is no revenue because 60,000 has already been offered to the tax. On the contrary, I am with some subscription model on a retainership. Every month there is a client who pays me 1 lakh rupees. End of the March, I recognize 1 lakh rupees as my income in the books of accounts. While I have got the data of number of API calls they have consumed, number of returns they have downloaded, whatever, I am raising the invoice on 5th April. So for the purpose of GST, the revenue is in 23-24, but the P&L, the invoice is raised on 5th April. So the GST revenue is in 24-25, P&L revenue is in 23-24. So the first and foremost thing everyone has to do is matching of this. What is the revenue in my books vis-a-vis what is the revenue that should be there into the GST? And the classic, the source that one can use is table 5 of GSTR 9C that gives you an explanation or working method as to how to derive the revenue. Now use that at an entity level. Split that into multiple GST, and I'm sure most of you would have 2, 3, 4 GST numbers. If there is only one GST number, well and good, but if you have multiple GST numbers, split this into multiple GST numbers. Get your revenue be frozen. Get your revenue be frozen. Here comes the GSTZen consolidated report, and I request Pranit, when you're showing up the invoice, you can just hover over the consolidated report and we can download one and show it. Now, this report will help you how much is the turnover that you have declared to the government in GSTR1 over 12 months. This data you have to download by R1 is one method, but you would have amended it. For example, March month, by mistake, you filed and written as nil. Let's say you have a turnover of 1 crore and someone has hit a button and filed it. In the month of April, I will again report all these invoices, right? When I report all these invoices in April, it is in April GSTR1. So when you download the consolidated 23-24 from the Zen, it will ensure the records that have been filed in the subsequent period pertains to 23-24, be it a credit note, be it an invoice, be it a debit note, it extracts it and put it in one place. So that is where I'm saying you should download the consolidated GSTR1 report. Compare with the reconciled to be reported values in R1. So you have now the derived numbers from the P&L to the R1. What we started with a basic, the reasons for difference. But when you start, you will have multiple things. What are the multiple things? You have reimbursement, like a packing charges, transportation charges. Some of you may record it as other income, but some might be giving a credit to expenditure. That should be added as an income for GST, because section 15 says it's a composite supply and it should be treated as part of revenue. Some of you would have a sale of a fixed asset. While in the P&L, you have only profit or loss on sale of asset. Gross it up and correct it and get it. Some of you would have money received from customers in advance for services, which is there in the balance sheet as a liability, while you have to add it as a revenue for the purpose of GST. Thankfully, for the goods notification, 66/2017 has deferred it. Lastly, you have intercompany, inter-GST, inter-unit transactions, Schedule 1 transactions. So you might have provided some goods or services to your own entity. Even the 53rd Council meeting had a small note and discussion on the allocation of the revenue. Schedule 1 makes this as transactions as taxable. Goods moved from one GST to another GST. Now for services, it is internally generated. Again, I'll give another example. I have a branch office in Delhi and Mumbai. While the Mumbai office and Delhi office procures business from the customers and my Bangalore office executes the business, I have payroll costs in the Bangalore and I have revenue in Mumbai and Delhi. Correspondingly, there is no revenue which was supposed to be cross-charged. You should cross-charge for the services. So this is also you have to look at by drawing the P&L, for all the units comparatively. It could be a situation where you have expenditure that needs to be allocated. You have purchased Microsoft license, you have imported Microsoft license, paid from the head office, commonly used by all the branches, cross-charge for the services. See my P&L profitability ratio is matching or not. These exercises you have to do to derive what is the revenue for the purpose of GST. Having derived the revenue, you have to do 3 classifications of the revenue. You have to do 3 classifications of the revenue, very important. Classification number 1, segregate this revenue between B2B, B2C, firstly taxable and exempt. First segregation is taxable and exempt. Even this taxable, if it is zero rated supply, with payment, without payment, all this classification you have to do. That is number 1. Reconciliation number 2. First reconciliation is turnover segregation. Second reconciliation is supply type categorization. HSN wise outward supply. It's very quite common that everyone takes the classification very lightly. In fact, the recent 53rd Council meeting also has some rate recommendations, where some rates have gone up, some rates have come down, some have been treated as exempt or put it into Schedule 1. Unless you classify a certain item of goods or services into proper HSN or service accounting code, you are not determining correct rate of tax. Thankfully, for services, most of them are 18%, but majority are not. There are 5%, 12% too. And there are 5% with conditions. Most of the 5% come with a condition that input tax credit is not allowed. Explanation 4 to notification 11/2017 says that you have to treat this as at par with 17(2), that is as good as an exempt supplies. So one have to do a second classification of revenue into my product wise, HSN wise services. That's the second reconciliation they have to do. So reconciliation 1 will also have the same revenue into different buckets. Reconciliation 2 will also have the same revenue into different buckets. The third and very important reconciliation is the tax type wise. How much of this is interstate and intrastate? That means how much of my liability is CGST and SGST, of which how much has been paid through GSTR 3B of the current year, how much of it has been paid through GSTR 3B of previous year, how much of it is paid through GSTR 3B of the subsequent year. Now, GSTR 3B of the current year, we understand. How do you say of the previous year? It might so happen that you have erroneously paid an excess tax. That excess tax in the month of, let's say, March 23, you have paid more tax. Mistakes do happen. Accountants do make mistakes, and basis the ability of the accountant, that will be the type. So higher the capable accountant, higher could be the capable mistakes. Someone has paid more tax. What will you do? Either you can apply for refund, or you rely on circular 26/26 2017 and adjust it into the subsequent month payment. So you have to do, if something was paid in the last year, which you are using it, how do I refer to it? You will refer it into table 10 of GSTR 9 of the previous year. Likewise, if something was short paid and paid it in during the year. So that means from the current year 3B, you have to unreckon some of the tax payment, because this payment pertains to the previous year, since it was reported into table 11 of GSTR 9 of the previous year. And wherever the table numbers I am mentioning, you have to pay an attention while you are reconciling your books of accounts to that reconciliation. And if someone has paid the taxes in the subsequent year, you can use that. After doing all that, you feel that there is some taxes which have been short paid or not paid, you can now pay using DRC 03. Please note, this payment has to be done in cash and not input tax credit. It has to be done in cash and not input tax credit, right? This is how one have to attempt to do an outward reconciliation. And this is independent of your tax audit or 26A's reconciliation or any other reconciliation. You have to get this done. With this, I come to end of the first part of our discussion, which is outward reconciliation. Moving to second part of the reconciliation, my theory session will end around approximately at 3:40. So we have 16 more minutes. We'll substantially complete so that we can look at the notice management part. Second part of the discussion is on input tax credit reconciliation. Pretty simple, because from 1st January 2022, input tax that you can claim is what is visible in 2B. So whatever is visible in 2B is what you get input tax credit. Agar 2B mein nahi hai, to credit nahi hai aapko. Now, we are already in financial year 23-24. So everyone knows the difference between 2A and 2B. All that one has to do is, again, 3 reconciliations here. So I always try to keep everything with the 3 numbers, because I strongly believe human mind can't perceive or remember more than 4 items. Reconciliation number 1, which I'm sure most of us, all of us do, have a subscription to a software, download the data from the government portal GSTR 2A 2B, upload your purchase register, do a matching of it. Items only in books of accounts, not in the government portal. Send out an email to the vendor so that he makes the payment, files the returns by 31st October. I'll not say 30th November because you don't have time. He does by 31st October so that you can take a credit of it. Second, items which are there in 2B and you have not claimed credit. You have not claimed credit. Check back with the accounts why are not there, whether the vendor erroneously uploaded or you have not booked expenditure, etc. It could so happen that it which is not there in 2B sometimes is like a cost. For example, my Airtel bill, my Airtel telephone bill. I cannot go back to Airtel now and say, hey, I forgot to give you my GST number. Can you correct those invoices? Sometimes very difficult. Maybe you have to recognize this as a cost. So exercise number 1, which everyone does, is reconcile your books of accounts with the GSTR 2A and 2B. Second, I am presuming that everyone are taking credits with whatever is there in 2B is what you are taking the credits. Most of us will defer the credits if that is an ineligible credit, you will be parking in 4B1. If the credit is to be taken in a future period, you will be parking into 4B2. Your 4B2 values will be moving to electronic credit reclaim statement, ECRS, which is like a shadow credits. These credits available to be taken at any point in time. So you have to reconcile with your books of accounts that what is the ECRS that is available, how much credit I have taken, I have not taken. Your values that you report in 4D1 is automatically reduced from your input tax credit available in ECRS. So the shadow credits, which is now this is beyond. So this is deferred credits. Deferred credits owing to Rule 37, you have not paid to vendor within time, or Rule 37A, your vendor has filed R1, not filed 3B, or you have not complied with section 16 subsection 2, any of those 6 conditions and 3 provisos, you are deferring the credits, could be any reason. How much of these credits which have been parked is what you have to see. That is your reconciliation number 2. Third, and as usual, very critical, is ineligible and reversible credits. Majority of the time, people don't make an attempt to do a classification of expenditure, classification of credits by expenditure. Certain staff welfare, like tea, coffee, food expenses, ineligible. Certain staff welfare, the vehicle hire not available. Certain staff welfare, the insurance to employees not available. Certain staff welfare, like club membership, not available. You have to go and see any of that. Donations, CSR made, not available. Repairs and maintenance to the vehicle, not available. Capitalized expenditure
There seems to be a network issue. Just a few seconds.
Okay, sorry for this. I don't know. I think I got stopped about ineligible credits. Hope Akila, can you confirm where was I got dropped?
Sir, ineligible credit, sir.
Yeah. Okay. So these ineligible credits have to be reassessed, especially 17.5B, 17.5C, D, A, everything has to be looked into. Most of the time, accountants have a less knowledge or limited knowledge about GST. They are not expected to be an expert in GST. They are accounted to be an expert in accounting. Their job is to ensure matching concept is there, revenue recognition is as per 7, valuation is as per 2, and I comply with the AS4 and AS5 prior period extraordinary items, I'm segregating it or not. They look at every aspect of the thing, AS11, AS12, AS13, that is what they are looking at, right? So let them do that job. Having done that job, now end of the year, if some credits which are ineligible having been availed, can be reversed and should be reversed. These credits which are availed in 23-24, which are not reversed, to be reversed, let's say has been reversed in the month of July, August, wherever it is. Track them, and this needs to be reported into table 12 of GSTR 9. Everyone should know where the values to be reported properly and appropriately at the right place. Having reported the values there, last item, the third item of the ineligible is computation of rule 42 and 43. Rule 43 is generally crazy. I suggest people to avail ITC if a machinery is used partly here and partly there, unless otherwise there is a good amount of information available to capture. But what does this rule says? The input tax credit, which is commonly used for the taxable and an exempt, proportionately to be reversed. This is one area people do not compute it. So recommended people do the computation. So just to recap, three things in the input tax credit: reconcile books PR with the 3B. I am presuming 3B is equivalent to 2B. So purchase register has all the information. So 2A and 2B to be reconciled with the PR is first thing. Second, the input tax credit that which is availed, whatever the credit that has been availed, you check for the ineligible credits and also check for the rule 42, 43 reversal. This has to be checked, right? So moving to one important part on the taxes paid and payable. We have outward liability, we had input tax credit, the actual eligible which needs to be computed, we have done that. So now given that the difference of it to be paid, one aspect which is not forming part of outward and inward, which is linked to both, which we didn't discuss, is RCM. That is what now I want to discuss, the last aspect. So the tax payable and paid out of the outward and inward would match. But the top of this is the reverse charge liabilities. This is an RCM liability. The good part of it, the year in which you make the payment, you will be eligible to take a credit of it. But you pay it later, you will only have the liability, no credit. Again, to put rest to the problem, the council, 53rd council, as is basis, historical, they were saying that whenever you issued invoice, will take a credit. But they further proposed going forward, you have to issue the invoice within the time so that you don't miss out on RCM liability. So let us await for the fine prints. Look at all the expenditures, segregate into two parts. One with ITC, we have seen in the second section. The other without ITC is now further you have to segregate into again three categories. Category one, is it an exempt purchase? Did I purchase something which is exempted goods? Not applicable. Did I purchase from an unregistered dealer, small dealer? Not applicable. Or I purchased from a registered dealer who is a composition supplies or exempted product. So where was this? The third, is it something which I am supposed to pay the taxes on an RCM basis? That means I have to pay to the government in cash and I have to take an input tax credit in the same month. So this is something that you have to do. Segregate the expenditure with ITC, without ITC, both revenue and capital. Those which do not have ITC, look at, is it an exempt purchases? Look at, you purchased from registered person but no tax, or composition dealer. Third, you have to pay under RCM. If you have to pay under RCM, better pay it now and you take the credit now. That is more important. So that is something you have to do. So just to sum up, do an outward reconciliation, do an inward reconciliation. Third, do the tax payment reconciliation. At that point, do a reconciliation with RCM liability. For an RCM liability, we had a session in the past, specifically what are the items covered under RCM. But I request everyone to look into notification 13/2017, updated time to time, which gives list of entries under RCM. Right. So these are the points one has to keep in their mind for closing books of accounts for the financial year 23-24. With this note, I switch the session, hand it over back to Pranit for briefly walking us through the automation GSTZen has brought in to simplify your notices. Once Pranit does his session, we will come back on handling notices and the Q&A, whatever if you have. Pranit, over to you.
Thank you, sir. Let me share my screen. Hope my screen is visible.
Yes.
Okay. So we have introduced notice management. This will major be it will be in GSTN level. Let me give a quick walkthrough of where you can
Pranit,
find
sorry
it.
to disturb. Can you start from login if it's possible?
Okay.
All right, so this is the home screen of our GSTZen. So when a user logs in, he has an ability to look at the multiple things, all the entities. Most of you at a CFO level, you have entity one, entity two, entity three, multiple pans, multiple things. So you need to have a visibility of notices received for all the entities. You might be having only one entity but multiple GSTNs. So PAN is same but GST numbers are multiple. You need to have a visibility at your PAN level, or you have to have a visibility, pick up a specific GST number, you need to see list of notices that are there. So this is the dashboard that you see the moment you log in. You will be seeing the red color, green color indicates whether returns have been filed, filed on time, not filed. On the top of it, you have a buttons toggle GSTR 1, 3B, 9. You will be able to see them. You can only see what the result of only those things. So it's all made easy. Here you can now see the notices. On the right corner, you have the bell icon where the notices has been done, which Pranit is going to do it. Left bottom, two icons, green and blue. The blue one is to chat with us any given point of time you're stuck in any screen. The green one is you have a doubt on the GST. You want the GST engine to answer you. You can hit that green button, put any question on GST, it will give you an answer, right? This is the overall navigations. Today's specific is only on notices. We will dwell deeper into the notices. Yes, Pranit. Sorry to interrupt.
So yeah, as I said before, the notice management currently is in GSTN level. Once you log in into the GSTZen, you will be provided with the list of GSTNs where you have to select the particular GSTN of which you want to check the notice. You click on the GSTN number where you'll be provided multiple options, lead register, purchase register. As you can see, we have notice management here. So this is how the page will look like if you are logging in for the first time. So if you want to fetch the notices from the portal, you have to refresh the you have to click on the refresh notice button. Once you click on this button, you will be provided with a login window. So you will be logging in with the GST portal credentials. Once you, once the login is validated, the screen will look like this. The status, it will be updated. This is how the status will be when you first enter the screen. Basically, the session is not active, with the portal. Now, once the login is completed, now you can press on the refresh notices button to sync all the notices and fetch all the notices from the portal. So once you click on this, you have to wait for 2 to 3 minutes, depending on the size of notices you have in the portal. All the notices will be synced with GSTZen. So this is the main view of the notice management, the calendar view, and the today and upcoming part. So today is basically the notice of which the due dates fall today will be listed here, and for upcoming it will be up to 15 days. So this is the calendar view. where you can see all the notices in calendar level. Basically, the due date of this notice is on Wednesday, November 9, 2022. And if you want to view the notices, you will have this counter on top of all type of notices. If you click on it, you can, as you can see, the demand will be displayed or the orders. So what we have done is to combine notice and orders, additional notices and demands in a consolidated view so that you don't have to go through multiple pages just to check the notice. And we have combined notices and additional notices here. You can switch the tabs, check the notices, and also you can download the PDF. Let's say you want to upload some documents regarding this particular notice. If you can just click on the notice ID. It will open a notice detail page where for this specific notice, the details will be displayed here. And if you want to change the status of it, you have to click on that icon. You can see these are the options you can select. If you select one and click on save, it will be updated in the main view. It should be updated so that you will have the reference of what is the previous status of the notice, what we have done, so that you can keep track of that notice easily. So next comes to the automation of syncing notices. So we file GSTR1 monthly. So the problem with the portal is that you have to log in into every time and go to that particular page, and you have to check the notices, and you don't have any keep track of like you have read the particular notice or you have any documents attached to it. So the advantage over that is we store the notices in our database so that you guys have quick view of notices without actually logging into the GST portal. Once you click on refresh notices, once the notices are synced, you can check the notices anytime without actually logging into the GST portal. And also you will have this last sync time where you will know that when exactly the notices were synced last time. And then you also have the autopilot. If you have multiple GSTNs notices that to be synced, you go to autopilot, which is available in the nav bar of GSTZen. You select download data, select username, password. Then, as you can see, you can select the download notice. And once you click start, you have to go through the login process once. Once you are done with the login, automatically every notice in the portal with respect to that GSTN will be synced automatically. And if you are wondering how will I know that how many GSTNs, I mean, how many notices are there, how many new notices are there in my GSTN level. So once you click on the GSTN, for example, I'll select this GSTN. Now, as you can see that we have a counter for the notices. This will display that how many unread notices are there in the notice management. And also we also have this consolidated feature of notices. Once you can click here, it will redirect to this page where uh, the consolidated notices of all the GSTNs that are in your account will be displayed here. And this new batch, you can see once you download the PDF, the status will be changed so that you will have a count of how many new notices are synced and what are already seen notices. So as this is the notice management of GSTZen.
All right, thank you, Praveen. Just stay on the screen. So, friends, firstly, you have multiple things that you need to know. Just be on the screen, Pranit, for a moment. Yeah. So every time when a notice comes, you need to also know whether you have already read this notice, you have not read the notice. So first time you are seeing, you need to know it. If there are a lot of notice, you need to have also search whether by GSTN, or if you know that this is belonging to this state, or whether the notice type, whether it's an order, ASMT 10, section 65, you need to know it by type. So basis any of those filters, you should also be able to get know. And you don't need to go any place to download the notices. So on the right side of the table, you can see this download button. So this shows as if that the entire data is at one place. So you're on top of this. We are working out to make this as an exclusive journey for the litigation, because from here you might have to prepare an ASMT 11, you might have to prepare an APL 01, you might have to file a reply to DRC 01, anything of that, right? So we are working out where you can do a holistic journey of the litigation management that is going to come up soon. But now you are track on it. Pranit, can you go back to that window of the calendar and the types? Yeah. So you will also see left side the orders. There were 10 orders, 4 applications that you are making. You have 5 notices. If there is a demand that is quantified into amount, things like that, which is there. I think there's something is due in March. Right? Can you go to the calendar of the March? It would show up something coming up in the March. Sir. Yeah, you just stand, hold on to, yeah. So you can see these notices or everything is tagged to the calendar. So you will also be able to see that, okay, on this date, this has been issued, and so date, you have to reply the number with the number that is available. That's where you are you are in control of the list of notices that you have received. Why is it very important? We know, owing to section 73 and 74, minimum there is a 10% penalty for the notice, and if it is 74, 100% the penalty equivalent to tax. It's just that if you act in time, that you pay the demand much before the 73 order, you can avoid even the 10% within 30 days of the show cause. Just before the show cause notice, you are making the payment, there's no penalty, right? Or you can reduce the 74 demand penalty to from 100% to 15%, as low as that. Timely being aware of it, you will be knowing it. Second, if you choose to go to appeal, you should also know the demand amount, so that on 10% of it has to be maintained in the pre-deposit. So you should be aware that last minute I should keep this amount so that I can file an appeal, APL 01, putting the amount in pre-deposit. So being at the top of this information is very crucial, and having a tool like GSTZen will help and simplify your journey of the litigation. And thank you, Pranit, for showing up. And now the session is open. You can unmute yourself and ask any question. If you have anything on the GST about today's session, or GST in specific, or you want to put your question in the chat, you feel free to put your question in the chat. Any questions to anyone?
Hello.
Yes, Shakti sir.
See, I unable to connect that the tax. Just let me explain. No tax notice, no notice management.
Correct.
So when I click that, it is logged. Source as a logged out in red color. Then I click here to download. That there is nothing happen. So whether you can move it to the production or not,
it has been moved to the production. Pranit, I would request you to connect to Mr. Shakti right after the call, and see where is it getting stuck.
Got it. Yeah, right.
Team will assist you, sir.
Okay, thank you.
Thank you. Any other questions to anyone regarding reply to notice, how to reply online from software? Amit Shah ji, we are working it out where the system will do the journey of tracking your replies, and your relied upon documents for your reply. You can upload all those things. Hopefully the team should be ready in couple of months.
Hey, I have another question. Is there any pop-up will come for the due for notice dues?
Right now, on the right corner, the bell icon will have the number of notices which are unread will be coming up on that. We are not putting up any pop-up coming, but on the right corner, the bell icon will show the number. So that would indicate, like in your WhatsApp, you will see number of unread messages. Likewise, you will see a number of unread notices. That is something will come up.
Okay. Okay.
There's another question. If entry of 23-24 recorded in 24-25, considering the same reported in R1 of 24-25, and if not considered in the P&L, then problem? The answer is no. If it's a 23-24 liability, so you have to make sure GSTR 9 table 5C P&L is 100 rupees. You add 10 to your anything between 5B to 5O. So the 9C total will become 110. And you have paid through 110. Table 4 of R9 will be 100. Table 10 of R9 will be 10. That's how it will be matching. So I guess that would answer your problem. Then there's a question, not eligible ITC list. So not eligible ITC list, there are 3 specific things. 17.1 for used for personal, which unlikely anyone will have, which is T1. T2, which is 17.2 exempted thing. You specifically got to see exempted has 2 category. Category number 1, which is 100% exempt. Category number 2, where by way of rate notification, the rate of tax is lower. The conditions to the notification explanation 4 of entry 11/2017 makes this our taxable supply as exempt. So you have to reverse the input tax credit pertaining to it. The last thing, the third thing is, even though supply is taxable, 17 subsection 5 of the Act blocks certain credits, so you have to refer that. Those are your ineligible ITC list. Yeah. Any other question? All right. So thank you everyone for watching the session and asking your questions. Vasishtha has shared the contact details of our support and the email. We have a WhatsApp, the broadcast. Anyone who are not in our WhatsApp broadcast, you can subscribe to our GST updates on our WhatsApp. So we will also put up our the WhatsApp thing, request you to be part of it, so that you can you will be getting all the details of latest updates. I'm sharing the WhatsApp link of ours. You can join our WhatsApp channel, so that you get, we don't spam it, we don't put anything other than GST, and we put the latest relevant update. So you can, people can click on this link and be part of our the WhatsApp community. Yeah. With this, we come to the end of the session. Thank you, everyone. Good day.
Thank you.